Hello, and a very warm welcome. As a hotel AI expert, I'm delighted to welcome all students of Europe Hotel School to this online learning journey. We're here to explore how understanding the numbers, the language of our industry, can truly elevate your career. So let's get started. This quote really hits the nail on the head. For just a moment, I want you to forget about complex math or spreadsheets. Instead, think of accounting as the language of the hospitality business. It's the language that tells you the complete story of a hotel, its wins, its challenges, and all of its hidden opportunities. So the big question is, how do you actually become fluent in this language? Because let's be honest, fluency is what separates a good manager from a truly great strategic leader. Well, that's exactly what we're going to tackle right now. We'll walk through the fundamentals that will put you squarely on that path. All right, let's dive into the language of hospitality. Think about everything that goes into running a hotel. You've got the front desk, housekeeping, the restaurant, sales, events, the list goes on. Well, accounting is simply the system we use to record, measure, and communicate all the financial activity happening across those areas. It's the common thread that connects every single department. And this is why it's so incredibly important for your career. Whether you're trying to decide on room rates for the season, figuring out staff schedules, or proposing a new menu, the strongest arguments are always backed by solid financial data. Understanding these numbers is what gives you the confidence to walk into any high-level meeting, understand the reports, and be a real contributor to the strategy. Okay, so just like with any new language, you have to start with the core vocabulary, right? These are the essential terms, the building blocks you'll see on every report and hear in every single financial discussion. So let's break down the 5 most important ones. First up, we have a revenue. Super simple. This is all the money flowing into the hotel. It's the income you get from every room sold, every meal served, every coffee, and every conference you host. It's that big top-line number that shows how well all your sales efforts are paying off. Next, on the flip side of revenue, you have expenses. If revenue is money coming in, expenses are all the money going out. It's what you have to spend to keep the lights on and generate that revenue in the first place. Things like your team's payroll, utility bills, marketing campaigns, and all the supplies for the kitchen and housekeeping. Then we have assets. These are all the valuable resources the hotel actually owns or controls. This includes the obvious physical stuff like the building itself, the furniture, the computers, but it also includes non-physical things like the cash you have in the bank or the money a corporate client still owes you. Now, the opposite of assets, that would be liabilities. These represent what the hotel owes to other people or businesses. It could be a big mortgage on the building, a bank loan for a renovation, or even just the upcoming bills you need to pay your food and beverage suppliers. And finally, we get to equity. Now, this one can sound a little complicated, but the idea is actually pretty straightforward. Imagine you took all of the hotel's assets and used them to pay off all of its liabilities. Whatever is left over, that's the equity. It's the net worth of the business, the value that truly belongs to the owners. Okay, so we've got our vocabulary down. Now we need some grammar, the rules that give this whole language structure and meaning. In accounting, we call these guiding principles. They make sure everyone is speaking the same language so the information is always reliable, consistent, and crystal clear. Our first rule is the business entity principle. And this one's simple, but it is absolutely non-negotiable. The hotel's finances must always be kept completely separate from the owner's personal finances. The hotel's revenue and the owner's home mortgage should never, ever mix. It's fundamental for clear, professional, and transparent reporting. Next up, we have the matching principle, and this is so important for understanding true profitability. Let's imagine you host a huge, successful conference in June. You wouldn't record all that great revenue in June, but wait to record the food costs in July, right? Of course not. You have to match the expenses to the revenue they helped create, all in the same time period. That's the only way you'll ever know if that June conference actually made any money. And our third key principle is consistency. This just means you use the same accounting methods over and over, year after year. Now, why is this so important? Because it allows for fair apples-to-apples comparisons. It's how you can look at the numbers and know for sure if your performance this July was truly better than last July. It's how you spot real trends over time. So we've got our vocabulary and our grammar. Now for the exciting part. Let's see how this language is actually spoken in the real world, how it directly shapes the decisions that hotel leaders are making every single day. This is really where the theory hits the ground running. Let's make this super practical. I want you to picture yourself in your future role. Maybe you're the head of food and beverage or the room's division manager. How does being fluent in this financial language actually help you knock it out of the park? Well, it empowers you in a few critical ways. First, you can confidently own and manage your department's budget. Second, you can accurately track your team's performance against its financial goals in real time. And third, and this is a huge one, you can build a rock-solid, data-driven case when you need to ask for more resources, like a new piece of kitchen equipment or another front desk agent during peak season. And just look how simple this can be. A chart like this tells a powerful story in a single glance. You can see right away that your actual labor costs were 800 euros under budget. We call that a favorable variance. That's a clear signal, right? Now you can make an informed decision. Do you reinvest that savings somewhere else or maybe reward your team for being so efficient? Okay, let's bring all of this together. Learning this financial language, it isn't just about passing a class or an exam. It's about giving yourself a real, tangible strategic advantage as you go out and build your career in this amazing industry. This slide right here really captures the whole journey. Without financial fluency, you're an operator, focused on the day-to-day tasks. But once you understand the financial story behind those tasks, you transform into a strategic decision maker, someone who sees the big picture and contributes to the long-term success of the entire business. And that's the key idea to take away from all this. Accounting isn't some abstract theory. Every number on every report is a practical tool. It's a tool that helps you not only build a financially sustainable business, but also ensures you have the resources to deliver the kind of excellent service that makes guests come back again and again. So I'll leave you with this question to think about. Looking ahead at your career, what is one major operational decision, maybe in staffing or pricing or purchasing, that you could now make with more confidence and more clarity? Answering that question for yourself is the very first step in using this powerful new language that you're beginning to unlock today.